Okay, folks, I do have that we are live with our second segment of Quantum Leap with Jake Birnberg, and we've had Jake on a few different times. I think this is about maybe the third or the fourth time now. He's really unique guy in the tax field. He's does he'll file your taxes, but he's also a strategist, and he's very knowledgeable about how to save your business a lot of money in taxes, how to lower your tax burden, how to save for your retirement, and do all these things that I would say garden variety CPAs and things don't really get into as much. Also, you can structure your business for sale to minimize taxes as well. But I just want to, I'm going to bring Jake here to tell us more. But Cory, if you don't mind just telling us, introducing yourself and telling us how you know Jake as well, because you actually recommended Jake the first time to be brought on, and we're certainly glad to have him back.
Yeah, hey everyone, I'm Cory and I, a visionary and a business and executive coach with Take Wing Coaching, so helping solo and small business service providers, coaches, and consultants get what they want. I like how Don put that in the last segment. Anyway, and Jake I've known since, I don't know. We met several years ago when he was reaching out about BNI, and he came and joined my chapter, and I've known him since. And I think what I like about Jake is he helps people keep what they have, which is, so when we help them get what they want and they keep what they have, that's, two back-to-back things that are so important in being in business and having a successful and enjoyable life. And I'm sure he'll tell us how he helps us keep what we have.
Great. And with that, we're going to get right to Jake. If you don't mind, Jake, telling us a little bit about your story and what you do.
Well, sure. First of all, thanks for inviting me. I'm really glad to be here and love talking to you guys. My story, I grew up in a really very poor immigrant family. I didn't even speak English until I was 4 or 5 years old, and they dropped me off at a kindergarten somewhere, and I knew nothing. And of course, you learn when you're at that age. Basically, we've moved to the low-income housing projects, which was like a real step up for us. That's how poor we were. And, money was very important at the time because, look, there's this whole thing, money can't buy you happiness. And it's true, money can't buy you happiness. But what it can do is it can keep misery at arm's length quite often. And it can help you do things and accomplish things that might lead to happiness themselves. So it was just very, very important. And my family, my parents kind of pulled themselves up by the bootstraps, saved every nickel and dime, and basically, my father had a car, and he would deliver sweaters and only fit a couple boxes in the trunk, and then he bought a Volkswagen van, and then he bought a truck, and it was just like one step after the other, and so that's my background. That's where I come from. And then, I was always good at things like math and rule-based games and stuff like that, and developing relationships and being in a relationship with people and my family and stuff. And so, when I was looking for what am I going to do with my life, doing taxes was and financial planning, those came very naturally because it's just a game. It's just like any other. It's just like Monopoly or any other board game. There's a lot of rules, and I was the geek who read the whole rule book and kind of explained it to everybody. And so that's what I'm doing now, and except now I get paid for it and the money is real. It's not Monopoly money anymore. So, and it's really important, like how you structure your finances is huge. And so how you structure your company will determine how it's taxed and how much tax you pay and how much you get to keep. And those are really, really super important things. And it's not infrequent that I could save somebody $20,000, $30,000 a year in taxes. So, and often that's a really significant amount of money, especially if you look at it over the course of several years, you know. So I went to a wedding recently for one of my clients' kids got married. And, you know, basically the client really paid for that wedding with her tax savings. You know, it was this huge, beautiful wedding, but she paid for it
Nice.
with her tax savings. So it was like she was very grateful, and it was really kind of a nice thing to be at. So, yeah.
Yeah, great. And a little testimonial for me. I appreciate your plain English, Jake, and how you explain a lot of even more complicated stuff to that than that, and really plain English and helping people understand this stuff. Because I think you really need to get kind of beyond the rhetoric. And you know, I actually came up in tax policy as well, working in Sacramento. So I started working on tax policy about 20 years ago, and I really see how impactful it is on controlling the economy and the motivations and behavior of people. And so what we kind of create in tax policy determines that behavior and how the economy is structured. And I think from an individual perspective, there's a lot of, you know, so much rhetoric gets thrown around, you know, this mega MAGA trickle down and soak the rich, and you know, a lot of this stuff that I think taxes kind of get kind of a bad name in a lot of parts. But you can really help sort through some of these issues. And I did just want to ask you about kind of what you see here as key issues out there with the Biden administration in regard to tax policy, in terms of where we've been the last couple of years, maybe where we're going on taxes, if you have any thoughts on that.
Well, sure. You know, so first off, I don't have a crystal ball, so I can talk a little bit about where I see things going. But it's of course, you know, next week there'll be a huge election, and that'll determine a lot of things. But you know, I mean, the Trump tax law of 2017 really favored the wealthy, and I think Biden was really trying to bring the balance back to the middle and lower classes a little bit, and that's why all the stimulus checks and all that stuff. And I think that right now, you know, the tax laws that were passed under Biden recently, you know, the Inflation Reduction Act, will really help a lot of lower and middle class people much more evenly than, you know, with the wealthy, you know, where, you know, hearing aids are now over the counter, so they're really cheap. Drug costs are going to be limited. Energy, you know, solar energy, EV cars, you know, electric vehicles and stuff, all of that is going to be really favored by that. And so that's what he's done. And then, you know, like, I mean, according to everything I've read, it looks like the Republicans are probably going to end up with at least one of the houses by January, based on next week's election. And if that happens, then in terms of any kind of upcoming tax policy, there won't be any, because they're not going to agree on anything. You know, so they probably just won't do anything at all unless there's real power struggles around balancing the budget around the end of the year. But aside from that, I don't think much is going to get done. And so I don't think there's going to be many changes upcoming if that's the outcome of this election.
Yeah, in terms of so we're really looking at what is most likely what has been passed in the last 2 years is kind of what we're going to be left with. Is there any thoughts there on, you know, I know there's, you know, 80,000 new IRS agents come in, and there was a number of tax incentives in that climate, or the bill had more than just climate. It was the Inflation Reduction Act. Is there anything kind of?
Yeah, well, the 80,000, look, you know, the IRS has probably, you know, 30,000 who are going to be dropping off the rolls, you know, in the next 5 to 10 years. So I don't think that the 80,000 is real 80,000, and they need new people. They need more people. They need to have stuff. And yes, it means that we need to be more careful as business people to dot our I's and cross our T's, because the likelihood of audits are going to go up for business people. And I think we need to just be careful about how we document things and keeping records and stuff like that, which people hate to do. But it's something that if you're in business, it's one of the bulwarks to prove that in fact you're in business and not a hobby. And it's what you need to defend yourself if the IRS ever comes after you. You know, I'm representing somebody in audit right now who did his own taxes, and he was a financial planner, so he felt like he knew what he was doing, and he owes well over $50,000, and we're trying to get that number down to, you know, about 40. So, you know, 35 or 40, and we're probably saving about $50,000 to $20,000 on that. But you know, it's you know, if you're in business, you really shouldn't be doing your own taxes. You really need help more than, you know, because the thing is, you might know a few things and you can answer all the questions that TurboTax is going to ask you, but TurboTax isn't very proactive about looking ahead or making other types of determinations about what you can do, what you can't do. And it's not looking for strategy, it's just looking to finish your compliance. So, you know, basically, in any situation, you really need to have help with your taxes if you're in business. And that's my very strong opinion. And I'll tell you that that before I became a tax professional, I had my own business and I did my own taxes. And when I met a tax professional who basically looked at my situation and said, well, I could save you a lot of money, I realized I'm out of my depth. And I hired him to do my taxes, even though I thought, well, I'm spending a lot of money on getting my taxes done. He was saving me very much more than I was paying him. So I know that from my own personal experience before I became a tax professional, that I thought I was pretty smart because I had a degree in finance and so forth and so on. But you know, it's like there's things. It's not what you know. It's what you don't. It's what you don't know, and it's what you don't know that you don't know. That's going to hurt you.
Yeah. Yeah. Well put. Well, we appreciate the objective analysis, and you know, I love talking tax policy, taxes. I'm going to turn it over to Cory for a few questions here.
Yeah, I just have a little story about that too, and this is one of the reasons why I refer people like Jake when I can. Many years ago, so like 25 years ago. Well, right after my divorce, I had things going on, and I did not file for a few years. And and then of course, who comes after you is the state of California, right? I mean, they're the worst one that comes down to it. And because I had regular jobs, I also had a little side business gig, and I'm like, oh no, and I told a friend about it, and he's like, you got to talk to my CPA. And I'm like, well, okay. So I talked to the CPA, and he was also, a friend and things like that. And not only did he get my taxes filed like that, he actually saved me more money than what California said I owed, right? So I, wound up clawing back, the money they had already garnished, and like, that's it. I'm never doing these on myself again, because I was earning okay and probably a good amount of money on a job at the time. But what I realized with the CPA is he just found everything, right? And they're really good at that. So when people tell me I've got a business and my taxes are so high, it's like, well, who's doing your taxes? Because if it's you're paying way too much. And, it doesn't matter if the EA or the CPA is, 300 or 500 or 700, chances are you're going to get, at least twice that back or more from trying to do it yourself, unless you're not earning anything, which even then they might save you. So,
yeah. And what David was saying earlier about the garden variety of CPAs, most are, the training to become a CPA is very much on getting compliance right, which means looking in the rearview mirror and reporting what happened.
Yeah.
And they have very little or no training in terms of looking ahead.
Yeah. No, that's also very important too. And especially as you have more and more income to structure and say, my mother was a big, back in the 80s and the 70s, it was all tax shelters, right? Tax shelter,
Right.
tax shelter, tax shelter. And she studied to be a CPA just so she could set up her own tax shelters. And so, I'm in big agreement that, it's also strategy and looking ahead, especially as you have more to protect and keep what you earn, right?
Yeah.
I have a little anecdote, Corey. I just wanted to
Sure.
share that I think also shows that I remember when my first year that I should have been an S corp when I wasn't, I probably would have saved me about $10,000 or $15,000 on my taxes. And then I just realized a lot of accountants, they won't actually push you to do something that proactively like Jake will. And then, because there are a lot of things in the tax code that can really help small business, especially. So for example, one's being an S corp, and there's some other things. I don't know if you have any thoughts on that, Jake, just about why small businesses particularly should need to be knowledgeable about the tax code in terms of what
Well,
they're filing as, or other things that
I
somebody like you can help them with. Yeah.
I think that becoming knowledgeable at tax code is like a very almost full-time type of thing to do. So I think really getting the right advisor is what you really should be aiming at.
Right.
Because it's like I look at hundreds of returns, probably thousands over my career. And even when they have tax professionals doing it, there are lots of opportunities to be found where the mistakes and opportunities just haven't been taken advantage of, that we could take advantage of. So I see it almost all the time. It's very rare that I'll look at a tax return for somebody who's making money and say, there's nothing we can do. And having an S corp is often a great idea, and often not the right strategy for people. There are costs involved. There are deductions that you lose. And you really kind of have to know how to put that whole thing together with a plan and looking at all the things that you're going to gain and all the things you're going to lose, and determine when it's right to start an S corp. Because having an S corp, I have one client who he went to school as a chiropractor, and they said start an S corp. He started an S corp. He doesn't make enough money to justify having an S corp. Meantime, he's paying me to file an S corp. He's paying California taxes on having the S corp. He's losing out on his qualified business income deduction because he's paying himself a salary inside the S corp, and he loses that deduction. He'd be better off as a sole proprietor.
Yeah, there seems to be a watermark for that. And the one advantage, I think, and just because California passed that AB5 law, is some of us look at freelancers using S corps or LLCs to protect themselves from, they make themselves more hireable, even though it doesn't quite apply.
That's true.
There's some issues there, but AB5 can be another reason to go that route. Even though it costs more, it also means getting more work. So
yeah, if you're a contractor, and I mean, this is something I did a long time ago as a contractor at Wells Fargo. I had a little bit of I had an S corp, and they wouldn't work with me without having the S corp. Because
yeah,
I'm direct. I work directly for them. So it's like,
right.
And sometimes I help people set that up so that they can go direct and become a contractor instead of being an employee.
Right.
So sometimes it makes sense. Sometimes it doesn't. You have to look at the employee.
Yeah.
habits,
Yeah. Since the rise of AB5, things have really made it difficult for freelancers. But that's not really a tax issue. That's just
No.
labor board issue.
Labor
a
law.
whole nother fearsome organization sometimes. So I believe I had another question for you. Yeah, what would you say what are the challenges for taxpayers these days? Some major challenges, would you say?
Well, making sure they have the right business structure, staying organized, and getting things together in a timely way. I can't tell you how many people come to me, on the morning of October 15th to get stuff filed. And I have to say, I'm not sure I'm going to be able to get this done on time.
Right.
And paying late fees, and stressing about it all year. So, we offer bookkeeping and payroll and stuff like that that we'll do as a package for people. And that really sometimes it pays for itself because, you know, I have a client, and if they were late on their taxes beyond October 15th, or if they failed to file an extension, the penalties alone would be so substantial that, you know, it more than pays for the service itself, you know, and that way, it also takes a lot of burden off of people because then they can focus on their what they're good at, which is whatever business you're in. You know,
Right.
attorneys can focus on the law and getting clients and serving their clients. And, you know, I have a lot of real estate agents, I have a lot of, you know, contractors, and none of these people are really any good at handling paperwork. You know,
Right.
I mean, very rarely do you get somebody who like knows how to do that. People also need help with when they're making big changes. So they're selling their property, they're selling their business. The time to get help is before you start, because once you start, you start losing options. You know, so like one of the things that we do really well is help business owners who are thinking of retiring.
Mm-hmm.
And to help them find a way to sell their business, because some businesses are not saleable.
Yep.
Or you're a coach. If you're not coaching, what happens, right? How do you sell your business?
Actually, we've got a plan because I've been working with somebody on that. But you know, there's once you get that
Right.
plan in place, then you got to look at the tax things.
But that's what I'm saying is like
Yeah.
you need a plan. You need to kind of work on that in order to create something that you can sell. And then once you have that, you know, the people will pay a lot more for a business that's growing.
Yeah.
So it doesn't take much to you know, like if you look at the different areas that happen inside of a business, if you make a 2 or 3% change in several areas, that can, you know, lump together to a 20% gain.
Yeah.
And if you can show that you're growing by 20% a year, you're going to get a higher multiple. A multiple is like what they will multiply your earnings by to determine how much they're going to pay you. So they're going to pay you a lot more for that business just because it's growing.
Right.
And so instead of paying like 4 times revenue, they'll pay 6 times revenue. So not only is your revenue 20% higher, but they're now paying 6 times that, 4 times that. And then we can show you how to not pay the full tax on that, because many businesses, not all, but many businesses, you know, you have a professional business, you didn't really put a whole lot of money into starting it, you know? So it's like you and your sweat equity and have no basis. And when you go to sell it, the whole thing is taxable as a capital gain. So we can show you how to kind of avoid that. And that's really, really helpful, you know?
Right.
And, you know, people come to us for a lot of other things aside from taxes, because, you know, obviously taxes are very, very important, but there's a lot of things that people miss in business. So the cash flow analysis and handling their cash flow. I have one business, they're making like $800,000 a year, husband and wife couple, you know, and that's net after they pay everybody. And they're possibly going to need to file for bankruptcy because their cash flow situation is so poor. You know, they have a client who pays very slowly, and so they have to pay out to their people as they go along. But, oh, okay, Cory, it's great to see you.
Thank you for being on, Jake. You'll finish up with David. Thank you.
Yeah.
I'll catch the rest later.
So, you know, as a result of that, of not having the cash flow, we need to kind of figure out how to get cash flow in there, or get a line of credit, or find something that we can do. Otherwise, they can go broke. People miss things like shifting from accumulation to distribution to legacy phases of life. You know, those things need to be planned for, you know, and people often don't think about retirement until it's too late. And, you know, and they don't look at all the risks inside retirement, the risk for needing long-term care, having longevity. You know, if you live a long life, you can outlive your money, you know. So there's a lot of things like that that we kind of look at with people to make sure that they're covering all their bases. That's sort of like really important.
Yeah, well put. And I'll just say, correct me if I'm wrong about this anecdote, that I know some rule of thumbs you've given in specific cases is, for example, if somebody's paying $50,000 in taxes and maybe they're just kind of doing it by themselves or with a CPA, hiring somebody like you to look at that, you could potentially save as much as 25,000 a year and, you know, save that going forward. I know you have some some case studies you've shared with us before, and everyone's different. It's really about getting set up for the future. But do you have any anecdotes like that about what you've saved people?
Well, yeah, I mean, you know, like this one guy who basically came to me and we just saved him about $32,000 a year in taxes based on this new plan that I put together for him. You know, and then there's other people who already have an S corp, but an S corp's not enough in their situation, and so we're creating a second entity that we'll need so that we can do some other things that we can't do under an S corp, you know, under their current circumstances. So, you know, there's a lot of different things that we can do. Look, I don't charge I always do like an initial appointment with somebody, because here's my philosophy. It's like, there's so much work out there. There's so much money out there. I probably could retire pretty soon if I wanted to. It's like, I'm not really doing this because I'm eager to make a lot of money. That's not my goal here. My goal is more to help as many people as I can to pay as little taxes as they can, because, you know, look, I don't like paying a parking ticket because it's a waste of money, you know, and so, you know, and maybe that makes me cheap or something, I don't know, but I don't like doing stuff like that. So, you know, paying taxes it's a much bigger bill when you're paying taxes that don't need to be paid, that there's a way out of getting paid. So I'll always look at somebody's situation, because if I can't help them, I'll just be right up front and tell them, I don't think I can help you. You know, I file for you if you want me to, but I don't think I can help you save any money. But, you know, it's like, so I look at their stuff. I don't charge for that initial look. Okay. And once I look, then I will tell somebody, look, I don't think there's anything I can do for you, or I think, you know, you need a tax plan, or I think you sometimes it's such a simple thing. I'll just tell them, this is what I think you should do, and go do it. And you don't really need me to do it or whatever. So I'm pretty upfront with people about that.
Yeah, no, and I appreciate you gave me one bit of advice on business structure, just business related, that you really need somebody on your side when you're making these big decisions about the structure of your business, or maybe it's a new client or cash flow or the implications. You need somebody like you other than your own judgment. I think that's hugely valuable. I did want to just end on who your ideal client is. Who are the people out there who you're looking to help with this tax burden?
Well, you know, I like to work with business owners. You know, I have a lot of attorneys, medical people, you know, dentists, chiropractors, tech contractors, who come to me for help. And I'm usually able to help them a considerable amount. I'm usually able to kind of help them wrangle their books together if they need that. We also have a sister company that does retirement planning. So I like working with people who are in transition, because, you know, most people who go to a financial planner, financial advisor, they're really going to somebody who's an investment advisor, and they're not really looking at the whole picture. They're looking at their investments. And frankly, I think if you're looking at somebody's investments and you don't take into consideration the taxes that you're going to pay on the earnings of those investments, you're really doing a disservice to the people. I have a new client coming in who, you know, she's like in her 80s and she's got about, you know, $1.5 million. She's done really, really well for herself. But her investment plan is completely backwards. You know, she's got her too much money in an IRA, and all the money in the IRA is in stocks, and half the money that's not in the IRA is in interest earning investments, and they just end up paying a lot more in taxes over the life of the client. And there's a lot of things we can do to kind of change that. So we're talking about what we're going to do about changing that. And, you know, it's also her legacy to her son is what she's thinking about. You know, she has 2 sons and she wants to leave them their money, you know, from whatever she doesn't end up spending in life in as tax-free way as possible. And so part of that is, you know, dealing with things proactively, because, you know, her sons are doing well and they're going to end up paying 35% taxes on this thing, on their inheritance. Whereas if we get her to pay some of the taxes now, it will be done at 22%.
Excellent. Well, we are about at time here, and I did want to wrap up. I'll just say that in looking at the landscape out here in the East Bay of other people like you, there's not that many people like you that I've found. I think there are a lot of the garden variety type seed PAs, and there are kind of people who help with investments for what I would say maybe higher income, you know, million plus taxpayers, but there's not that many people who help small business in particular. And to really get to be a bigger small business, you need somebody like you to help you grow, or
Yeah.
maybe sell the business, so to speak. Yeah.
Yeah, I think it's really true. So
Great. Well, thanks so much, Jake, for coming on and all the great insights and advice. I will put a link to your LinkedIn in the comments. If you have a website or something else you want me to share, feel free to send that to me. I can
you
put
want
that
me to
in
put
the
it,
comments.
you want me to put it right here in the comments here in the chat?
Sure. Go ahead and do that. And we're going to leave it there for today. Thanks for coming on, and we'll see you next time.